What's going on, guys? We're getting a beautiful day from the Bitcoin miners. Bitcoin is rallying. We have a few levels to look out there. And you guys might not know this, but Bitcoin is the third largest blockchain for NFT volume. And Bitcoin started its NFT venture about a year and 9 months ago. And Bitcoin's chain now has 75.9 million ordinal inscriptions. This brought 6,901 Bitcoin for the miners, which today is about $429 million. And they are in third place, trailing behind Ethereum and Solana. Total sales for Bitcoin reached 4.49 billion, which is only 1.35 billion behind Solana at 5.84 billion. However, it is a leap away from Ethereum's roughly 44.13 billion total. This should be a positive in terms of transaction costs, and over time this could be something that contributes more and more towards the Bitcoin miners' revenue. And we'll see how the cycle ends. What will be the big hype thing? Will it be meme coins still? Will we finally get into NFTs this cycle? Or is it going to be something completely different? What do you guys think? Now we're going to talk about what some analysts think about the Fed rate cuts, what they think about recession, the economy. I'll show you a couple tidbits and then I'll leave you the link down below. It has a bunch of different analysts and their thoughts, and surprisingly most are saying that we will probably see a soft landing. At least data right now indicates that, but things of course can change. Now I do want to show you guys Bitcoin before we get to those articles. Bitcoin's been in a nice uptrend. Keep an eye on the ascending support. Now, of course, on the 1 hour, we are becoming a bit overbought, but that's okay. Zooming out to larger time frames, we still have some room to run potentially if the market wants to take it there. We do have some space left on the RSI, and we're going to need it because we need to come and break the $65,000 area. Otherwise, we're likely to get rejected. We might break this ascending trend and retest some lower levels. And one thing I want to show you guys, a beautiful bullish divergence that played out. This is why you want to be looking for these things. Look at this, basically marked the bottom on this pullback on the 16th of Monday. You'll see that the RSI bottomed out here and went higher. However, the price went lower. You'll see this was the bottom at the RSI. Look down to the RSI, and then the price went lower, but the RSI rose. This is known as a bullish RSI divergence. The momentum was starting to shift. The buyers were starting to step in, and the price reacted to it. That buying pressure picked up. And bullish and bearish divergences work even better on longer time frames. They're definitely an important tool to use along with other indicators. Despite this nice move up, Bitcoin still has some work ahead of it. Of course, the 65,000 that I mentioned to you guys, we do need to break that. But what I'm really watching, what in my opinion is the most important level to break, is breaking out of this descending pattern. We've been in this long descending pattern ever since we topped out back in March. What Bitcoin needs to do is break out of this resistance. Once it can break this and then take out the all-time high at 74, I think we're good. I think we are on our way to rally, to have a great Q4 like we have seen in every previous halving. So we basically have three key levels in my opinion. It's going to be the 65, it's going to be the break of this descending trend, and you might argue that maybe like 71, 72 could be another resistance, but I think that's 74-ish, basically our all-time high. So we have 65, the break of this descending resistance, which is probably right around maybe 68. It depends because it obviously drops as time goes by, but right around 67, 68. If we can break that level, then we're coming to test our previous all-time high, and that is when Bitcoin goes parabolic. Everything is lining up perfectly, just like previous cycles. A lot of you are discouraged because of Bitcoin's action. It's seeing lower highs, lower lows. That's usually bearish. It's breaking under certain EMAs. We did see a death cross. And speaking of the moving averages, we actually do have one more final level I should probably mention to you guys. I do think 64 is going to be important, a break over our 200 MA. Right around the 65,000 resistance, maybe it can take out both. Maybe we find it as resistance, pull back, and then retest, take them both out. But what we also need to see is this 50 MA break back over the 200 MA, give us that bullish momentum again. But check it out, we have seen this before. In the last cycle, we did see a death cross and a death cross again before we went on to rally. You'll see what we saw last cycle, lower lows, lower highs. Of course, you have to think this is 2020, you know what happened in 2020. But I do think the market is most closely following the 2020 cycle. It's freshest in our minds. Trust me, Wall Street knows what they're doing. Wall Street knows how the cycles work. Wall Street knows that Bitcoin is going to top out in 2025. Whales have been accumulating while retail panics out. While retail thinks this is the end, whales see the big picture. Whales are buying. They know Bitcoin is not going to fail, so why wouldn't you buy? But we did eventually break out of these lower lows and lower highs. We finally broke out of our descending resistance. That brought us to test the highs here. Once we broke those, we had to test our all-time high, the 2016 halving cycle, and we did break that. Went absolutely parabolic. Absolutely parabolic. There have been these drawdowns in previous cycles. Here's the 2016 halving cycle. You'll see that for a long time, you're kind of range bound. This from May of 2017 to roughly August. Just a consolidation period. Basically seeing lower highs and lower lows, and then it broke out. And then it kind of did it again where it sold off a bit, and then it finally broke out. It took months. Months of selling down, drawdowns. This happens. These are buying opportunities if you're following the cycle. And if you're at the right time in the cycle. In my opinion, we are at the perfect time in the cycle, the right time. But anyways, before this becomes way too long of a video, I'm already limited on time today, I wanted to show you guys the Fed Watch tool, and then we're going to go over a couple of analyst notes, analyst statements on what this 50 basis point cut will do. And are we reaching a recession or not? So as for the next meeting, the November 7 meeting, we're basically getting towards neck and neck in terms of a 50 and a 25 basis point cut again. The smaller cut is the more likely one right now, at least according to this, but this will likely change just like it did in anticipation of the last meeting where we saw the 50 over the 25 and then the 50 under the 25. We'll see probably the same thing here, and the market will argue of which is the more likely outcome. But I'll lead it to this statement from one of these analysts, and it actually kind of says a lot. Rather than worrying about this cut versus that cut, what's the totality? Like I said last video, what's the totality? Well, the Fed is shifting into a back to the business cycle mode. With inflation easing, the labor market is expected to dictate the pace of future Fed adjustments. Over the coming year, we expect approximately 250 basis points in adjustments. That is 2.50% in rate cuts. Dialing back restrictive monetary policy could extend the U.S. economic cycle, benefiting both bonds and risk assets. Investors should pay attention to tail risks. Positive catalyst and a stable economic backdrop. Keyword stable economic backdrop. And now falling interest rates continue to line up around the soft landing narrative. And what about this analyst, head of US fixed income at RBC Global Asset? We remain of the view that recession is not a base case scenario over the quarters ahead. We see no need for the Fed to move ahead of the curve by introducing a series of larger cuts. Of course, we will watch incoming data carefully, and if labor market conditions or general health of the consumer weakens, we stand ready to adjust our views. So right now, most people are saying like, oh yeah, we're not really expecting a recession, but we're watching the data, because the data can change, of course. More often than not, when Fed starts to lower policy, we are met with some sort of economic slowdown, some sort of recession. And check this out, about a 50 basis point cut. A 50 basis point rate cut when the economy isn't already headed for a recession is new territory for the transparent Fed. Last soft landing was achieved by Alan Greenspan back in 1995. David Russell makes a good point that the current rate is way above CPI. No need to delay. Jobs have been trending lower along with energy prices, which probably made the decision easier. Even if a slowdown isn't clearly happening, the Fed thinks it's a bigger risk than inflation returning. We have gone full cycle. The pandemic is officially in the rearview mirror. Remember, these rate cuts will bring into growth. Countries around the world are easing now. Countries around the world are making debt cheaper. And when we get to these easing cycles, we get into global supply growth. The money in the world grows essentially. And this very closely follows the Bitcoin cycles. It happened in 2016, it happened in 2019, and it happened in 2024. This has always helped Bitcoin's price. You can see the clear correlation. This and the halvings, like I said, I think these are the two most important, most important things for Bitcoin. All you need to follow is M2 global supply and the Bitcoin halving. It's that simple. The cherry on top is also following the chart. In the end, I do expect this cycle to play out very similar to previous ones. I do expect us to top out at some point in 2025. Might not be the end of that year like most cycles see. Considering that all-time high came in so early, maybe we're getting a little bit of a front running here. Maybe we're a little ahead of schedule. For that reason, I do think it's smart while things are running, while things are getting overbought, while things are getting very FOMO induced. This is when you want to start taking some profits, selling some covered calls, trimming something off the table. Don't try to time out the top. Don't try to snipe the bottom. You want to buy in the bottom zone and you want to sell in the top zone. Life is easy that way. Or it's even easier if you simply just buy and hold Bitcoin, look out 10 years from now and you'll probably do better than all of us. But anyways, guys, what's your strategy? How do you feel about the 50 basis point cut? How are you feeling today about the stock market, about Bitcoin, about the crypto miners? It's definitely a good day in that regard. Bitcoin has a few levels to take out before we're seeing all-time highs. I do think that's coming. What say you? Are we going to see new all-time highs this year? Or has Bitcoin topped out? Is this cycle playing out differently than every other cycle, and why. But anyways, thanks as always for watching, guys. I'll see you on the next one, and enjoy the rest of your day.